Folks, today I'm going to talk about GameStop. I'm going to talk about short interest, show you exactly what happened to GameStop, and show you other stocks that it's happened to and it may be happening to as well, and expose you to some other stocks that have high open interest or high short interest, not open interest, high short interest. So this is GameStop. Now, GameStop currently has a short interest of 131% at the time of this video. Now, what is short interest and how do we express all of this? Short interest is basically a number of shorted shares divided by the number of shares outstanding. It's just that simple. So for example, let's say a stock has 1.5 million shares short and it has 10 million shares outstanding. The short interest would be 15% because 1.5 million is 15% of 10 million. If the open interest, if the shares outstanding was 10 million and the short shares were 15 million, that would be 150%. So right now, GameStop has an open interest of 131%. And you could see the pattern where a stock doesn't really do anything, and then all of a sudden starts breaking out, and then you see these wide bars. When that happens, that's typically a result of short shares getting squeezed. In other words, short traders have a short, they expect the stock to go down. GameStop was expected to go down because, well, they sell used video games and the world is really moving online. Everything is downloadable. Used physical video games aren't really in right now. And GameStop really does most of its business via malls. So malls are closed right now due to COVID-19. People aren't playing physical games. They're downloading the games. There's really not much of a demand for GameStop. I mean, the company will more than likely go out of business in the next couple of years unless they reinvent themselves. So you have a bunch of short trades and then the stock goes up and those short trades have to cover their shorts. So they start buying aggressively and what happens is a buying frenzy, but it's not a buying frenzy because people want the stock. It's a buying frenzy because people are covering their short trying to get out of a losing position. So usually, typically, most of the time, you will see a short covering characterized by very wide range bars when price goes from very little and it just goes up exponentially and jumps up like it did right here. This is probably as best example you can find. But again, characterization is lots of very similar trading range, very similar ATR, average true range, the difference between the high and the low, as you could see here. If you were to look at the ATR here, it was probably, let's see here, high and low, 15 high, 14, 12 low, $3 range or whatnot. But the bottom line is the stock is trading here within range. Then it starts breaking out. You could see here the shorts start covering. And as they start covering, it causes this huge bar. And this will probably continue for a few more days, maybe even a week. And eventually what will happen more than likely is share prices will fall back into this range because all the shorts will be covered and there won't be any more longs buying the stock. Because how do you cover a short? You buy. So if you have all these shorts that have been collecting throughout this period, and they're buying here, it's causing a buying frenzy, but in actuality, it's just short open interest being covered. So I want to show you this pattern on two other stocks. This is Sensonics Holdings. Notice, same thing here. Stock doesn't really do much, and it just kind of hovers. Then shorts start covering. They start panicking right around here, and as soon as it gaps from 1 to 150, the shorts just start covering the stock. It goes all the way to $4, and now it's kind of, every day now it went all the way to 221, then it went to 288. The only reason, and here's the interesting part, and here's the part you should pay attention to, the only reason why a stock would continue going higher instead of the short covering ending the rally like you will on 99 out of 100 stocks is if the company has something else to offer investors. For the most part, these companies do not. These are penny stocks. These are low-cost stocks. I doubt a company that's trading near 50 cents really has anything to offer investors unless there was like some breakthrough. let's look at the news on this stock. Let's just see what happens, just so we can get an idea. Enters overbought territory. Holders increase previously announced bought deal offering common stock at $100. It was announced as bought deal offering common stocks. It's in the same ballpark as AMC Entertainment. That's short covering. So the bottom line is this is not a heavy flying stock. This is not Tesla. And the reason you'll see some of these trading activities in big stocks like Tesla is not usually because of short covering. It's usually because there's something happening that's a catalyst for growth, and there's always something else. There's a carrot after the short covering saying, hey, the company's going to do this. There's more innovations, more discovery, more reasons to make money. Whereas in a stock like GameStop, used video games in retail locations. I mean, check mark. So you could see here, this doesn't happen just on GameStop. This happens all the time. Look at this. Narrow trading range. The stock really doesn't do much. It breaks out again. It takes a really wide range. It goes from 50 cents to $4. It makes 800 times return in like a week and a half or like a month. And little by little, it'll start falling. And here's another example. Notice, narrow trading range, the stock starts breaking out, and then the range gets closer. The stock really doesn't do much. It goes from $4 or $3 all the way to $35, and then it starts falling down. And I would expect the price of Gridstone to move back to the $10 or $5 within very, very short time. But here's the best part of this video. I saved the best for last. There are other, let's see, 1, 2, 3, 4, 5 stocks that I want to bring to your attention that have very, very high open interest. And these stocks are tempting faith very similarly to what GameStop is doing right now. And these short covering, this short squeeze can go on for several weeks, not a month, not months, but it can go on for a few weeks. So, but usually once it peaks out, it doesn't go back to that all-time high. So I doubt that GameStop will continue to see prices going to the 160 because once you cover that short, there's less shorts. So the only reason it would happen again if there were more people shorting the stock than covering the stock, and usually when it's moving up like that, that's not the case. We can be assured that for the most part, a good amount of the shorts have relinquished their position by covering them. So I'm expecting GameStop to fall back into its range and go back to $18, $20 very, very soon. But with that said, let me show you stocks that have the highest open interest behind GameStop right now. So GameStop is at 131%. This is Virgin Galactic. And notice it's still moving higher and the range isn't really there yet. So there's still some time before the short coverings get to it. But it has a short interest of 81.53% right now. So don't be surprised if Virgin Galactic saw the same type of trading action, a parabolic trading action that leads it to go higher and short the heck out of those trades, causing them to cover and causing the price to go back down. Next one, and this is not going to be a surprise to anyone, AMC. It looks like it may be there already. Not there, but it looks like it's going into that same direction. If price continues moving higher, I'm expecting shorts to begin covering. It's got 68.98% of all shares are short shares. Can you imagine that? 68% of all open interest is short. And it makes perfect sense. I mean, look at this stock over time. Look at the trend. Look at the 3-year chart. Look at this thing. Movies? Do you think all movies are now being showed on HBO? People are not going to movie theaters. This is in the same ballpark. I mean, movies being released is like, it's by the time my kids are in college, my 7-year-old's in college, I don't think we're going to have movie theaters. So don't be surprised to see the same type of faith with AMC Cinema. I'm actually more bearish on AMC than I am on SPCE. But again, Virgin Galactic is stock number 1, 81% short open interest. AMC, stock number 2 with 68% open interest. Next one, Bed Bath & Beyond. And I think this stock actually just had its short interest spike. This is this right here. I mean, the stock went in one day from 30 to 47. Now it's all the way back down. I think the shorts have spoken, and I wouldn't be surprised to see more trading action like that before the stock goes back into its range right here of like $12, $15. So this one, Bed Bath & Beyond, ticker BBBY, may be going through a short squeeze right now as we speak. The next one is Ligand Pharmaceutical. This stock, let me show you a long-term chart on this stock. Look at this. It had a high of 277. It went all the way down to 57, and now it's at 100 and something. And again, it looks like it's going through a short squeeze. This stock has a short open interest of 64%. 64% of everyone holding the stock is short. And I think if it goes up a little bit more, we can be in for a short squeeze. And last but not least, Fizz, National Beverage. And I think this was a short squeeze right here, and I think the stock is about to come down. The bottom line is, the range on the stock, if you look over time, you will see the stock is trading. The range is like, let's see, 41, 60. It's at 140 right now. It doesn't seem normal, and it seems like a short squeeze. Whenever you see these bars, I call them tails, because you have a long tail, and then the meat of price action goes below, just like you see on Fizz, just like you see on Bed Bath & Beyond. That's a tail right there. See, the longer the tail, the higher the chance of the short squeeze. Not yet on AMC, but again, all of these stocks, Virgin Galactic, AMC, BBBY, LGND, and Fizz have an open interest, a short open interest between 80 and 62%. And I believe BBBY and Fizz may be going through a short squeeze as we speak. So folks, GameStop is not the only one. I hope you understand what short squeezes can do to a stock. I hope you understand how we measure short squeezes. And most importantly, I wanted to show you 5 other stocks that are setting up for the exact same fate. Hope that helps.